Good evening, everyone. Okay, let me know if you can see my screen. Let me know if you can hear me. You can use the chat box to reply. I'll see it here. Let me know. You're all welcome. Welcome, 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 welcome. Okay, just one person that's here. I need um I need more persons. Okay. So let me send a reminder. Oh, okay. This was supposed to start by 6 and it's 3 minutes past 6. As I love keeping to time, I don't like wasting time. I'm going to just okay, you can see me. Welcome, Gabriel. I'm just going to wait for some few minutes, let's say like 2 minutes before I start the forwarding. So while I wait, I um Gabriel, I believe you can hear me because you just sent a message. Please, do you have any idea about forex trading? Let's start from there. Still use the chat box. I'll see your message. Do you have any idea about forex trading? Any, what it looks like? I'm waiting for you. Hmm, you're taking time to respond. Oh, big of mine. Okay, I just want to give, just in a minute time, we just started. Oh, let me wait till 10 minutes past it. That will be an extra 4 minutes more. So, um, that will be an extra 4 minutes more so that other persons can join in. We just start by 10 minutes. Okay, someone else is here. Um, if you know, if you know anybody that this class would be beneficial to, you can just send the link to them, or maybe your status, any group, any trading group that you might be in. Just send the link to them so that they will join in. So that they'll join in. Just send the link to them. I'm just waiting for other persons to join me before I officially start. I'll start in 3 minutes time, so I don't um, take more time that I ought to. So before I properly commence, I know a lot of persons don't know me. This is the first time I'm doing this in Alpha Crypto Signals, and I'm not really active in the group. I don't talk, I don't chat, I don't respond to messages, all of that, but I see everything that is going on in the group. I'm actually more of a forex trader than a crypto trader. So that's why. My name is Sarah Bamba. I have been in the forex, the financial markets. Let me put it that way, because I was actually very active with crypto then and forex, but I just switched to forex trading because for me forex is not predictable. So it depends. Everybody with their own individuality. So everybody has their own difference, their preference. So anyone you want to decide to trade, whether forex or crypto, is different. Okay, so I've been in the space, forex and crypto space for 5 years. That's 2020. Okay, so 2020, and it has been a good ride because I really love forex trading. I really love crypto trading. Why? Because these are markets that you don't need you can be wherever you are and still do your thing. Let me put it that way. You can be wherever you are and still make your money. You don't need this buying and selling stuff. Maybe looking for someone to sell to, looking for someone to patronize you and how to make money. You can make money wherever you are, so long you have an internet enabled device and an internet connection. You are good to go. Okay, so that is how forex trading is, and crypto too. Okay, so like yes, it's time now. So I'm going to be giving 10 minutes extra, and the 10 minutes is already exhausted. So I'm going to begin with the training. I'm going to begin with the training. So I'll start from the very basics. So I intend for this week, I intend to cover everything as regards forex trading, from the basics of forex trading, what is forex, the market pairs that are traded, the trading apps, the brokers, they come to analysis and psychology. I'm going to be covering everything there is in the forex market today. Sorry, this week. So that is my plan for the week. Okay. So that is my plan for the week. So we're going to start with what is forex trading. Let me share my screen. Okay, I think I'm coming. Let me add something else to my stage. I think I added a wrong fact. Okay. All right. I'm trying to add my slides so that I'll have I'll follow my guide as I'm teaching. I don't want to go astray. Teachers can talk a lot, so I want to just follow my guide here. Is processing. Okay, so we are here. Let me add it up. So today we are going to be looking at the introduction to forex trading. That is what we are going to be looking at today. The introduction to forex trading. So we are going to start with the basics of forex trading. So what is forex? A lot of persons do ask questions. What is forex trading? What is this? But I used to hear of it too, but I don't know what it is. And some persons self spelling forex forex, they'll spell forest like bushy place forest, and they do confuse both of them. So we're going to be learning what is forex. Forex means foreign exchange. That's just simple. As simple as that. That's what forex is, foreign exchange. And it becomes wider. when you want to go deep, like want to dig deep into it. So foreign exchange is the buying and selling of currency pairs. That is what forex simply is. The buying and selling of currency pairs. All of us knows these bureau de change guys, like the Aboki or the Hausa guys, that when you go to them, you give them dollar, they give you naira. That is forex. So, as simple as it is, that is, you have just done forex trading. Let's say, or you go to the bank, you have dollar in the bank, and you want naira. So when you give them the dollar, they give you naira, or they give you naira, you give them dollar. That is still forex. That is foreign exchange. So anything that has to do with exchanging two currencies, that is forex. Now that is the simple layman definition of forex trading. In our own sense, as forex trader, what we do is different. It's not that thing we do. What we do is different. So in forex trading, it is a prediction of the movement of currency pairs. That is what forex trading is. The prediction of the movement of currency pairs. So when we go deeper, you understand this, especially when we get to technical analysis. So that is the definition of forex trading. Like as in what we do. I will use this crypto. We are all coming from a crypto background, so I'll use that to explain. For crypto, what you do is that you do your is crypto normally uses fundamental analysis. So you do your research about a coin, you see what people are saying about it, you look at the maximum supply, look at the circulating supply, look at what other things I look at it. So you just do your own research, the devs, the developers of the coin, and the utility. So according to those stuff, what you do is to buy the coin and keep. You buy it at let's say when it is less than a dollar, and you maybe when it is $2 or more, you sell it off. Depending on the amount of money you used to buy it, you get your profit. So that is for crypto trading. You just predicted that this coin I'm going to buy in this time frame is going to move from $5 to $10. You get, so that is you predicting. That is for crypto trading. In forex trading, we do both ways. We don't just buy and hold for like let's say 2 months, 3 months. For those that trade meme coins, meme coins can do 1000x in 5 minutes. Okay, so in forex trading, what we do is both ways. You can either make profit selling a particular currency, or make the same profit buying a particular currency. So it's both ways. That is how forex works. It's unlike crypto trading. It's unlike crypto trading. Okay, so that is what forex is. So let's continue. I believe this one is clear enough. I just explained the layman, the simple definition of what forex trading is. So the next we are going to be looking at is what is traded in the forex market. What do we really trade? Do we trade I'm trying to call crypto because we're all coming from a crypto background. I want to be using crypto examples so that we can understand better. Do we trade Solana or oh Jesus, BNB coin, ETH, and all of those stuff. So what we trade in the forex market is first of all currencies. You have the dollars, we have the Great Britain pounds, we have the euro, we have the Japanese yen, and all of those. So basically, what is traded in the forex market is they are all currencies, okay? But however, as you continue to diversify, you can trade metals like gold and silver in the forex market. Now, there's also what we call synthetics indices or derivatives. It is being traded in the forex market too. Then we trade stocks. You can trade Tesla stock in the forex market. You can trade Facebook stock. You can trade Facebook stock. You can trade Amazon stock in the forex market. Then last of all, you can trade cryptocurrencies in the forex market. Yes, in the forex market, you can trade Bitcoin, you can trade Ethereum, you can trade BNB, and all of um, those cryptocurrencies. You can actually trade it in the forex market. Is as wide as that. Now, for your own interest, the forex market is the largest financial market in the world. The largest financial market in the world is the forex market, because this market it has been in existence like since the 80s, the 90s, the 70s. The forex market has been there. So it's the largest financial market in the world. And the trading volume of the forex market is up to trillions of dollars every day, like daily trading volume in the forex market is up to trillion of dollars. So this will just tell you how big and wide the forex market is. That is just like the forex market is big and it is huge. Okay, so these are the stocks that are traded in the forex market. Up, if you can hear me clearly, please use the chat box and indicate that you can hear what I'm saying, that you can hear me clearly. Just use the chat box. Use the chat box. I want to know. Then you can also share. You can also share. Can also share. So let's continue. The next we'll be looking at is they are um the trading terms that are used in the forex market. What are the terminologies? Like in crypto has their own term, like um pump, dump, bag, moon, and all of those stuff. When you hear all those stuff, you know that all time you have all time high, that's ATH, the all time low, you have market cap, you have circulating supply and all of those stuff. So crypto has their own terms. When you hear this word, you know that this person is coming from a crypto background. So the same thing with the forex market. When you hear some people in stock, you know that they are coming from a forest. I mean, I'm coming from the two. That's why I know the two things. I can use them. Okay, so we start with the lots. Now, the lot is the unit of currency pair that you want to trade with. Now, for instance, in crypto trading, you can say you are using your full bag. Let's say you have $100 you want to buy a coin, you say that I want to use $20 to buy the coin. That is for crypto. Now, in forex trading is different, kind of. It's what we call it is lot size. So we have lot size like 0.1, we have 0.2, we have 0.3, but the least is 0.001. That is the least lot size you can use in forex trading. I want to give an example of a centralized exchange. So let's use Bybit for example. You know, in Bybit, if you want to place a buy order, like you want to buy a token, you can say you want to use 25% of your account to buy the token. You want to use 50%, 75%, or 100% of your account to buy the token. So in forex, it is lots. In forex, it is lot. Now, like I explained before, we have 0.01 lot size, which is the lowest lot size that you can use. The least amount in a centralized exchange that you can use is 25% of your account. It's 25% of your account. In forex trading, the least lot size that you can use to trade is 0.01 lot size. So we have it till 99. So you have 0.01, 0.02, then you go on to 0.1, 0.2, then just like that, then you get to 1, then you get to 2. That is for your lot size. Okay, that is for your lot size. Now the next thing you are will explain is the pips. The next thing we explain is the pips. So the pips is called percentage in profit. That's what it is called, percentage in profit. Now it is the amount of let me share my slide. I think I have to explain this so that we have a better understanding. So I want to share my trading platform just to explain this piece. Okay, so we are here. Let me okay. So if you can see my screen clearly, oh, okay. If you can see my screen clearly, this is a chart. We get to this place. I don't know if you can get here today or it will be tomorrow. But let me explain what the P is. I have to expand my chart on this side. Okay. So if you look at this part of the screen, okay, the ending part of this screen that is here, you are seeing figures like 1.16600, 1.16800, 1.16250. So these are all prices. They are called the pips. Now, for instance, if the market moves at this point from 1.16250 to 1.16260, we will say that the market has moved by 1 pip. So it's just percentage in points. It can be like a profit or a loss. So, for instance, when you buy a coin in crypto, you say that the market has done 2x. That means you have gotten two times your money. Maybe you bought with $100, you saw $200. The same market has done 2x, that's giving you twice your money. Or let's say for those that trade meme coins, you can see as high as 1,000%. That is 10 times your money in a very short time frame. So let's say, but in the crypto, in in the forex market, we don't use 2x or 10x. What we use is pips. So let's say you enter a trade. Well, we'll be using for us to understand better. Let's just be using buy. So you place a buy order on Euro USD. I think I missed something. I have to go back so that I explain something first before I come here. So let me finish explaining page six before I go back to what I skipped. So let's say it moved from you place a buy at 1.16250 and it moved to 1.16260. You say that it has moved by 10 pips. So you have made 10 pips of your money. So when you can call 2x, you can say I've made 10 pips, or I've made 50 pips, I've made 100 pips. Now, this piece is not really about you like doing your 2x or 10% or 20%. No. Let's say you use a lot size of, remember, I was talking about lot size. Let me escape this place. I was talking about lot size. Yeah. So let's say you use a lot size of 0.01. You get, so like I explained before, for your lot sizes you have between 0.01 to 0 to 99. Sorry, these are a lot sizes you can trade. So let's say you enter a trade with one lot size, that is, let me use this again. I have to bring it up again. You enter a trade with one lot size, and that one lot size, you the market moved with 10 pips. The market moves with 10 pips. Now, this 10 pips profit has given you $100. You get, this 10 pips profit has given you $100. That's why I say it's slightly different from It's slightly different from the forex, from the crypto market. So I know I'm going back to crypto and coming here so that we don't get confused because we are all from the crypto background, so we don't get confused. Okay, so let's continue. So this is for the pips. I hope we get it. The pips is related to your lot size. The piece you will is related to your lot size. Let's say the way you use 25% of your account. You know that someone that bought a cryptocurrency with 100% of his account, let's say the 100% of the account is $1,000, and that crypto did well. You know, the profit will not be the same with someone that bought with $100 or $500. There'll be a mass difference in the profit. So this is the same thing that is happening here. Okay. So I want to give you the I want to give you the calculation. So with 0.01 lot size, 0.01, okay. So with a lot size of, let me, I think it's a lot size of 0.01. Remember, this is the least lot size you can use. And your market move by, let's say the market moves by 10 pips. Market moves by 10 pips. You are going to make a profit of $1. We are going to make a profit of $1. So let's say someone with a higher capital place a trade with 0.1 lot size, and the market moves by the same 10 pips. You are going to be making a profit. That person makes a profit of $10. Hope we are getting the drift. The higher your lot size, the more money you make. This is how it's calculated in the forex market. Why someone that use one lot size to trade and the market moves by that same 10 pips, the person makes a profit of $100. So this is just how to calculate the pips. So if you want to go into like 0.05, 0. All over, maybe in between those stores, you know what you are making and what you are losing. So this is about the pips and the lot. I just wanted to bring the both of them together. So the next we are going to be looking at, let me go back to my slides. The next, the next, okay, so I wanted to explain something before I missed something here. Like, um, I was explaining the what is traded in the forex market. I called currencies, metals, stocks, and cryptocurrencies. Now, under currencies, we have the US dollar, we have the Canadian dollar, we have the New Zealand dollar, we have Great Britain pounds, European euro, Switzerland franc, Japanese yen, and the Australian dollar. So those are the major currencies that are traded in the forex market. There are actually other currencies like South African rand is traded in the forex market. Mexican peso is traded in the forex market. Danish krona is traded in the forex market and so on. But these are the major ones that are traded more often in the forex market. Now, what you want to know is that first, the currencies are not traded on their own. The currencies are not traded on their own. They are traded in pairs. Like for instance, we can have a trade of US dollar and Canadian dollar slash. That is a pair. That's why I say the trading of currency pairs. They are paired together. It's not you cannot trade US dollar alone. You cannot trade Canadian dollar alone. You cannot trade New Zealand dollar alone. So let's say you are trading get between pounds and let's say Switzerland franc. That is I'll go back to let me come back to to my to the trading app so that we will see this as I'm showing you. Just see them here. Let me come back here. Let me come back here so that I just want us to see the as they are showing. Okay, so this is my watch list. This is, let me add a new pair. Now you can see Forex here. I was explaining the stocks that are traded in the Forex market. So you have your stocks, you have funds, you have futures, you have Forex, you have crypto, indices, bonds, and all of those stuff. Now, if you look at this place now, you will see two pairs that are against each other. Here we have British pound and US dollar. That is Great Britain pound and US dollar paired together. You see that they cannot be traded in isolation. They cannot be traded on their own. Here we have the European euro and the US dollar. Here we have this one is the rate between pounds and Japanese yen. They're always together. Now you don't do the pairing yourself. The market has already been paired. You get, the market has already been paired. So some persons will ask me, okay, why will I choose the pair to trade? Will I bring dollar and Japanese yen together to trade? I say no. The pair has already been traded, like it's already made. You only so just to pick it and trade. You don't do the pairing yourself. It has already been paired. So that is how the forex market is. I just thought to explain this because I did not explain it earlier. Okay, so let's continue. Let's continue. Let's go further. Now, the next thing we are looking at is the long. We are looking at the pairs, the terminologies in the forex market. I wanted to call crypto market before. In the forex market. So the next thing is long or short. I know we'll be familiar with this one because we are crypto people. Long is to buy, like to place a buy order on a pair. So when from Alpha Crypto Group. So long is to buy, short is to sell. That means you are predicting that according to what you are seeing, you say this thing is going to dump. Oh. That is a crypto term. This coin is going to dump. Oh. Short is for those that trade futures. So short means to sell, and long means to buy. Okay. The next thing is the broker. Now, your broker is like your exchanges, your crypto exchange, the Binance, the Bybit, the MA, SMC, MSC, sorry, the MSC, Get.io. So those are broker in crypto. Now we have broker in Forex too. So like we know, for a broker, you open an account with a broker, you fund the account and you start trading. The same way for crypto trading is. So you open an account with Bybit, you do your KYC. After your KYC, you make deposits and you can trade anything you want to trade. The same thing we have brokers in the forex market. You open an account with them. When you open an account with them, you do your KYC too with your ID, your valid ID cards. You do your KYC with them. Then you what? You start trading. Now, one thing you want to know about brokers is that different brokers have the way we have different exchanges, different crypto exchanges. We have different brokers too. Now, these brokers they give you access to the forex market. The way exchanges gives you access to the crypto market, brokers give you access to the forex market. All brokers they have their advantages and disadvantages. As if a person said that don't trade futures on Binance, trade on Bybit. Okay, so some brokers they have their differences. I used to call it broker differences. Brokers have their own differences. So you have to pick a broker that is regulated, first of all. If you want to trade the forex market, choose a broker that is regulated. Don't just see any random broker and start using them because some brokers are there to scam you. Okay. Then we have some devs that are there to scam people in crypto trading. You just buy the coin and then dump the coin on you. So we have some brokers that are there to just scam. So if you want to choose a broker, the first thing you want to see is that is this broker regulated? We have regulatory bodies for brokers in the forex market. They are so the broker you are trading with should be regulated and they should be transparent. There are some brokers that we have what we call stop loss. There are some brokers that the trade has not gotten to your stop loss, but you have been exited out of the trade. You cannot even explain what happened. So some brokers are manipulative. So you want to choose a broker that is not manipulative. And there's what we call swap fee in forex trading. The way you have commission, like your gas fee. That thank God that one came. In crypto, it is called gas fee. You know that amount you pay when you want to swap one currency for another. In forex trading, is called swap fee or commission. Just that the swap fee is charged only when you hold the trade overnight. So for instance, this is 6:39 p.m. The forex market closes by 10 p.m. If you are in a trade and you don't want to close the trade by 10 p.m. and you want to wait, leave it to the next day, you will pay what is called swap fee. That is when you pay. Then there are some brokers that charges you commission based on the lot size that you are using. It's not all brokers that does that. I trade with a lot of brokers. Some charge you commission as you are placing a trade. They are charging your commission. The what is called gas fee in crypto trading. It is called swap fee or commission in forex trading. So so some brokers charge higher gas fee. I say gas fee. Gas fee is for crypto. Some brokers charges higher commission than others. Okay. So like for instance, in Ethereum network for crypto, their gas fee is higher. You can spend $100 for just gas fee. Whereby in Solana network or other lesser network like BSC network, you understand, you pay something lesser. But in so I'm just trying to tell you that there are brokers charges different commission based on the lot size you are trading with. Okay. Now the forex market opens by crypto market is 24/7, but forex market is 24/5. Okay, kind of 24/5. So it opens on Sunday evening by 10 p.m. and it closes on Friday by 10 p.m. That is the forex market. It's not like crypto market that is like every day. You understand? Okay, so that I hope we all understand the concept of a broker. Now, the concept of the broker. If you need more information about the broker, you can reach me out on DM. The next thing we want to talk about is the bulls, bullish and bearish. The bulls, we all know bulls, we are coming from a crypto background. So when we say the bulls are in charge of the market, they are those that are actually buying. I'm bullish on this coin. I'm bullish on Ethereum. I'm bullish on Bitcoin. That means you are saying that Bitcoin is going to go higher, it's going to go up, it's going to pump. You understand? So that is bull, that is bullish. However, for bearish, you know that I'm bearish on Bitcoin. No, that means Bitcoin is going to dump. So that is the same thing in forex trading. Bullish and bearish. That means a particular currency pair is going to come down. So let me just use my screen to explain bullish and bearish so that we understand better. Okay. Okay. So we have here. Hope you can all see my screen. Um, let me use. Let me come this way. Um. So I want to use a market that I have not marked. Let me use a free market so that it not look like I've marked my charts before now. I'm looking for a bearish market and a bullish market here. Okay, for instance, you can see that this is US dollar. You can see that at some point it was just coming down, like from this point it has come down to this point. So this is a bearish market, right? Because it is coming down, so it's bearish. So by the time it's going up, let me look for a good example. Okay, I've seen one. By the time it's going up, like from this point, it's going up. This is bullish. This is bullish. It is going up. So the bearish is coming down. The bullish is going up. So it's the same thing with forex. I believe we have better understanding here because we are all coming from a relatable background. So this is that. The next term we'll be looking at is I didn't include them here. We have the TP and stop loss except unlike crypto trading is such that when you buy a coin, even though the coin, let's say you buy um 10,000 units of a particular coin. So the your value is in the market is like if the price of the coin is going up, you are making money. But if it is coming down, you are not making money. You are losing your money. That is for crypto trading. However, in forex trading is different because depending on your position in the market, either it's coming down or it's going up, you can still make money. That is forex. So for instance, let's say you buy a coin, you place a buy order on a particular a particular forex pair, and you say when it gets to this point, let's say you buy at $10, you can easily tell the market that if it gets to $100, exit this trade and keep my profit. Know that if you buy at $10, it gets to $100, you have made money. You can tell the market to exit the trade for you and keep your money. You don't have to be monitoring it. When the market gets to $100, this is in forex trading. When the market gets to $100, cryptocurrency, that particular currency pair that you bought, when it gets to that amount, it will keep your profit for you. Even though you are not online, your data is off, your phone is you any day you come, you see your profit there. So long the market gets there. So it's not like crypto trading that you be like, oh, I slept off, so I could not take profit. And now the thing has done for me. That is not how forex work. It's different. Okay. So even though you sleep off and the market gets to that place, when it gets here, it takes your profit and you are good to go. And you are good to go. Then, however, the reverse is that maybe it's your stop loss. You place a buy order and you bought a coin and the thing starts dumping. You know, in crypto market, you can only when you sell off. That is when the market it has. That is when you can keep your money. So let's say you bought at the same $10, and the value starts going down, and that $10 becomes $5. It becomes $3. You are losing money. Your $10 is no longer $20 again. So you are losing your money. In forex trading, it is in such a way that you can set your stop loss and say that when this thing gets to $8, remove me from this market and keep my remaining money for me. It will not get to $0. You just come and you see that your coin is still there, but it is no longer valuable. But in forex trading, you can set what is called stop loss. So when it gets to, let's say from $10, it goes down to 8, you say I will this thing even though I'm not online. When it gets to $6, just exit the market for me and keep my remaining money for me. So that is the forex market for you. So that is for that for the forex term. We have talked about loss, pip, long, short, broker, bull, bullish, bear and bearish, stop loss and take profit. So the next thing we're going to be looking at, this is just basics. So we're doing basics today. The next thing we're looking at is the scalpers, types of traders. For type of traders, we have four types of traders. We have the scalpers, we have the day traders, we have the swingers, and we have the position traders. Now, the scalpers are those guys that need, let me not say the guys that need identity. No, they are not the scalpers. Oh. The scalpers are the impatient guys that cannot stay long in a trade. So, for instance, they enter a trade at let's say they bought a comeback by with at $10. Maybe the coin gets to $15, they have exited, they have sold the coin and taken their USDT away. You get. So the scalpers are those guys that they just exit the market with little amount of money. They don't have patience for something to do 1000% or to do 10x. They cannot wait to 10x. So if they see 10%, if they see 2x, they are off. If they ever see 0.5, they are off. You get. So those are the scalpers. They enter trades and they just go in and out of trade. And these guys are more like they are not really gamblers, sha, but as they are exiting the trade, they are looking for the next trade to take. As they're exiting the trade, they are looking for the next trade to get. So they trade all around. They are just looking for opportunities here and there. So those are the scalpers. Then we have the day traders. These guys can stay in a trade longer than the scalpers. Like for me, I'm more of a day trader. I can enter a trade in the morning and leave it till afternoon or evening before I exit. If the trade has done well, sometimes I can hold the trade till the next day. Okay. So the day traders are those guys that can stay longer in a trade. They can stay in a trade for a whole day. But to some extent, they don't hold the trade till the next day. So if they enter a trade today, they are exiting that trade today, whether it's in a profit or a loss. That's why I say this is where crypto gets different from forex. So for the forex, for crypto guys, you just buy the coin and leave it there. Whenever you see profit, you take it. For those that trade meme tokens, as they are just watching the thing in maybe 1,000 hour, it moves from 70,000 cap market cap to let's say 150 market cap. They just exit. Okay, so for day traders, they enter that day and exit the market that day. So the next thing we have the swingers or the swing traders. These guys they all trade longer for 2, 3, 4, 5 days. So the guys that we all trade for, let's say they all the trades, they'll enter the market position today and they'll be like, okay, I'm going to hold the trade till next week. Those are the swing traders. They all trade longer than any of the previous guys that I've taught. Now, once you know that these swing traders they take more profit from the market than scalpers. Like I said, scalpers can just stay and take something little. That is what they can carry. Day traders take something bigger than the scalpers, but the swing traders they hold like they take something bigger. Then the guys that are really they are not really traders, but they have other stuff they are doing. They are the position traders. The position traders they can stay in a trade for 2, 3, 4, 5 weeks and not they are okay. You get because they have a longer target to achieve. So they are not going to be looking at their chart every day to see. Some of us, when we buy a coin, every day we'll be checking it to know how much we have made from that coin. This is not position traders. When they enter, they set their stop loss and they go and do whatever they want to do. Whenever they come back, they check their trade. It can be a week later. These guys can even set a trade and forget it. And should be told, the position traders make more money from the market than any other type of trader because they stay longer, they wait longer, they have higher risk to reward. You get, they have higher risk to reward and they make more money from the forex market. These are the position traders for the crypto guys are those guys that can buy a token today and say, I'm leaving this token for the next 5 years. Those are the position traders. They make more money from the market than any of all these people that are looking for urgent 10x. Okay, so that is for the type of traders. So I talked about, I don't know if I can do this practical. I wanted to do a demo on how to open an account with a broker, but I don't think I'll do that. I'll just go into navigating trading view. That's what I'll do now. So the platform that we use to do all our analysis is the trading view. This is what we use. This is what we use. For crypto trading, you have insider information. That is the main thing that works in crypto trading, especially meme trading, is having an insider information that will be like, this coin is going to do this go from 50K cap to, let's say, 2,000 cap. You get that is for you need to have insider information. But in forex trading, well, we don't work with insider information. What we do is that we do analysis, and it is from our analysis we say that I'm going to place a buy on a particular currency pair. So this is the platform is called TradingView. I believe a lot of us, those that are technical analysts, we know TradingView. Is fundamental analysis, don't use TradingView. Okay, so this is TradingView. This is what the platform looks like. Um, so where will I start from? This right here, you are seeing USD OX, Euro, and all of that. This is my watch list. This is US dollar index. This is Euro. This is Great Britain pounds and AUD and all of those stuff. These are here. Okay. So this is my watch list. I can decide to add, if you want to add a particular crypto, a particular currency pair. If you want to add a currency pair to your watch list, you click this plus sign that is here. Click the plus sign and search for the pair that you want to add. So let's say I want to add GPP, Great Between Pound and Switzerland franc. So yes, I'm going to click the plus sign and it will be added to my watch list. You see it's already here. So if I want to delete, I'll just go and delete it and it's out. So this for my watch list. Now let's start from this the right part, the left part of the chart. This is my navigation tools. If I click on it, I'll see a cross, a dot, demonstration, magic, eraser, and all of those things. What I use is the arrow. You can see it here. This will be navigation tool I use. Arrow. Now, if I click on the cross sign, I'm no longer seeing the arrow. This is what you'll be seeing, this cross. I don't like using the cross. I don't like using the cross sign, so I'll use my arrow. Okay, so the next thing I'm going to be doing, these are tools, different tools that are here. Let me open them. This is the trend line, this is ray, information line, extended line. Now, one thing you should know in forex trading is that not everything you must do. You must not do everything. You must not use everything. You must not use every strategy. I'll emphasize on this more when we get to technical analysis. But then for now, it's not every tool here that I use. So the only thing I use here is trend line, the horizontal line, and the horizontal ray. So if I use my trend line to connect highs and lows. That's what I do with my trend line. So you see this low here, you see another low, you see another low. If I want to connect this, I'll just put infuse my trend line and drag. So this gives me a like a good definition. I think I did something like this over the weekend and I'm surprised that okay, yes, I drew it. No, it wasn't last week. You last week I just connected my this point to this point and this point wasn't from because this is today. This candlestick you're seeing here is for today. So as at when I drew this thing, it wasn't formed. So I just drew it and left it and today it got here and reversed. Let me go to a lower time frame so that we can see it. You can see it just got here and started coming down. So this is what your trend line does for you. It helps you to mark highs and low, especially potential highs and potential lows. So um, when you mark the highs and low, it gives you an idea of the next high or the next low. So that is what the trend line does for you. Now the next tool I use here is the horizontal line, and it helps you to mark support and resistance. That is what you mark with. So I can put let me delete this one because you see that it was respected before market broke above it. So I think for now, this one is no longer valid. So I'll delete it right now. Let me go to Let me go to a higher time frame so that we'll see what I'm talking about. For the horizontal line, let's let's see how to. Okay, now this one, oh, I've placed this one here before, but I can't just let me just delete it. Now I say I use my horizontal line to mark support and resistance. So we have a you have a support here, you have another, you have don't worry, when we get to technical analysis, we understand support and resistance better. So these are support areas. So I'll pick my horizontal tool here, I'll pick it, and I'll just take my cursor to where I want it to be and just click, and we have this there. So that is how to use the horizontal line. So from this, I would suspect that when market comes to this place, it's going to reverse. I'm just touching technical analysis little by little. So this tool that is here, I don't use anything here actually. You have your fib, you have your these are fib tools, then the squares and all that. I don't use it. And this place too, I do not. So the next thing I do here, I use here is the long and short. These are my forecasting tools. I used to forecast where market will get to before, like if I want to place a long order, if I want to place a buy on a particular pair, I can use this to project the buy. If I want to place a sell on it, I use it to project the sell. So let me do this. Let me go to a lower time frame. I think I've used this before. Or let me use a more recent one. I did this one today. So before I go there, it's already here. Let me just explain this. You can see this. This is a, let me go to a plain chart first. Okay, this is a plain chart. So a long position, I can click it and it goes up. This is, if you see something like this, that means the person is predicting a long position. Where this red bar is below and the green bar is above, the person is predicting a long position. That means the person is telling that this currency pair to is going to buy, is going to increase in value, is going to go up. Now, for instance, if it is the other way around, a short position, the red bar will be up and the green will be down. So when you see something like this, that means the person predicted it. So a currency pair is going to decrease in value, it's going to go down, it's going to short term, it's going to be bearish. Okay. So so for instance, this is my own chart. I think this one was last week. These two were last week. This one was today, this morning. So for this particular pair, it was a okay. This one was a sell order from this point. I think when I was trying to shift my charts, I just shifted it, but originally it was here, here. So this was a sell order I gave to my peeps, and you see the market came down. So I used it to just do prediction, and at this point, this one it became a buy order. Now it's on now a sell. We entered the trade this morning and it has actually moved. So it will still, this has done 20 pips. Thank God we have talked about pips. This has done more than 20 pips. So this morning. Okay, so this for the short position. Then I think that's all for this part. Then the next thing I use here, you have my brush. I can use it to circle a place like a zone where I want you to focus your eyes on, like I just did. If I want you to focus your eyes here, I can just cycle it there with my brush. Then another tool we have here is there's the highlighter, which I don't use. The next thing I use here is the rectangle. I use the rectangle to mark a ranging market. When we get to ranging market, you will see it. So I want to um let me look for a market that actually range. Let me just give you an example. But I will explain better when we get to ranging markets. Oh wow. Not okay. I think I see something that's manageable now. So my horizontal line, sorry, my rectangle bar is here. I'll just click it and use it to mark wherever I want to mark. So we have it here. Like I say, use to mark a range in market, whereby the market is just going back and forth a particular support and resistance. Okay, so this is it. So this is your horizontal bar that is there. Let's see if there's okay. I use Eclipse sometimes. The Eclipse does the same thing as the brush. It has the same function. So there is nothing much here that I use. Then the text is what I used to when I was writing the 0.01 is the text function that I use. And if you want to write on your chart, you can do that on it. Then let's see. Only then if you want to maybe when you are finished, you are done with analysis and you want to tweet it, you can just click tweet and it takes you to your Twitter and you can post there on your Twitter on Twitter. So that is that. These are just emojis. It's not necessary. Yeah. Then this is your major. If you want to calculate the number of pips, okay, let me come this way now. Let me just do a particular example with these pips. We want to calculate the number of pips that a particular trade has moved. So I can just click on this measure, place the place the two on wherever I want to place it to. So let's say I want to place it from here. I think from this place down. This is where we enter the market this morning. I can place it from this place that we entered to where the market is currently, or how low the market has gone. So let's do the calculation now. And I take it down. This one is disturbing me. Let me remove it. So I place it here. I think this was where we entered from. And it comes down. Okay, it comes down. So the market has come below this place. And if you look at this, if I take off the cursor, it's going to go out. So if you are looking at my screen very well, you see 25.0. So we have done 25.0 pips down. So we have made from where we entered the market, we have made a profit of 25 pips. So this is just like a pip count. It just makes you count your pips. So if I take it down, like if I take it down, it will just tell me how many pips it's going to be from that place downwards. So from here, we entered here, from here downwards. So from that place, not too fast. From this place downward, actually is, I think 100 pips and more. Okay, we are seeing this is at where I am now is 129 pips. It's 129 pips down. So this trade is actually a sell trade. If we are able to hold it from this place to this place, we have made 129 pips in profit. So let's do a calculation with our lot size. If we're using a standard lot size, that is $1,229 if we are going to hold. So it depends. It depends on that. So that is that for the major two. Let me delete it. So I take my analysis back to where it was before. Okay. Yeah. So here. So the next 2 year, actually this is where I stop. I don't use if I want to delete everything here, that I won't delete it. I don't want to delete my analysis. So let's say remove 22 joins. So if I want to delete everything, that is, I'll just click on this and everything goes off. But I won't do that because they are my analysis. I don't want to delete them. Okay. So that is that for on how to use trading view. The next we'll be looking at is the time frame of the market. So if you click on, you are seeing 1H here. This 1H that is here. This is your the time frame count. So if I click it, you have a drop down. This is 1 minute. If I go to 1 minute, Uh, this is telling me that every candlestick here, these candlesticks here represent were formed in 1 minute. The candlesticks that are here were formed in 1 minute. So I don't pay attention to the 1 minute time frame because it's too noisy. You have 5 minutes telling you that every candlestick that is here was formed in 5 minutes. Then you have 10 minutes and all of those stuff. You have what I really pay attention to is 1 hour, 4 hours, 1 day. And but I don't, okay, let me put it this way. I don't pay attention to time frames that are below 1 hour because they can give you false signals. They are too noisy. So I pay attention to time frames that are 1 hour and above. So if I click on this is the daily time frame. Every candlestick that you are seeing here actually were formed in 1 day. All these candlesticks that you are seeing here, they were all formed in 1 day. If I go to the monthly time frame, all the candlesticks on it will be formed in a month, like 1 month interval and all of those stuff. So that is it for. Please, if you have any question, use the chat box. You can use the chat box to answer your questions. Well, yes, we are late, Suleiman Fatima. Like very, we have gone far. We have spent over 1 hour already. So use the chat box to um whatever you have not clear of on, just use the chat box to indicate so that I can quickly explain. So this is it for the on how to use trading view. The next thing here is the candlestick. Though I don't change my chart, but if you want to change your chart to a line chart, you can use it. Just click on it and your chart becomes a line chart. So that's that. If you want to change it to bar chart, just click on bar here and your chart becomes a bar chart. So most trader uses the candlestick because candlestick gives more information. When we go to technical analysis, you see why. Candlestick gives more information about the market. So I use my candlesticks. I use my candlesticks. So these are for those that use indicators. Me, I don't use indicators, so I don't come here to do anything. I don't trade with indicators. I do my analysis myself. Then if you want to set an alert, maybe the alert is when um you will not be on the trading view, but your data will be on this time. You'll not be on your trading view and you are waiting. Let me go back to, let's say the market is currently at this place, this top here. You want the market to get to this bottom before you trade. Though this is a monthly time frame, so before this market will get to, it can be next year. So, but let me just give you the example this here. So you want the market to get to this point first before you place any order, before you trade. So you may even forget. What you simply do is to mark the price that is here. Let's say this is 1.021. Let's use 1.02. Okay, 1.02118. This is the price that is here. So I'll go to my alert, click on it and say 1.02118. So I'll create it. You see that it has been created here. So anytime, even though it's the next 10 years, but it will not get to 10 years. But I believe that before the market will come to this thing, it will be like next year, not this year, because this is a monthly time frame. So when the market gets to this particular point, I will get a notification, like a pop-up notification. So this is what the alert does. So you can use it for any time frame, 1 hour time frame, 1 hour time frame, and all of those stuff. So this is what the alert does. So let me delete it so that, because it's just for explanation purpose. So I delete it and it's gone. So I think there are no questions. So because please, if you have a question, just use the chat box to send your question. Let me answer them before we call today wrap. So, like I said before, today is just for introduction, the basics of forex trading. So we have seen what is forex, what is traded in the forex market, the currency pairs that are traded in the forex market. We have seen forex terminology, the lot size, the piece, the take profit, stop loss, broker, um, bulls, bear, long, and short. We have seen the type of traders, the scalpers, the position traders, the day traders, the swingers, and we have seen the trading app. Now, this is one trading app we use for analysis. That is the trading view. The other trading app we use is MetaTrader, either MetaTrader 4 or MetaTrader 5. But I don't use MetaTrader on my PC. I use it on my phone. So that's why I did not even because if I teach you how to use MetaTrader in your with PC, when you get to your phone, you'll be confused because it's different entirely. That's why I didn't bother. It's entirely different. So I didn't just there is no point doing it. Okay. So okay, I believe there are no questions. So in the absence of any question, we call today a wrap. We'll see you tomorrow the same time, 6 p.m. That's when we're starting. So we'll go further. We are building on knowledge. We go into analysis tomorrow. We start with analysis tomorrow. We continue on Thursday. There is no class on Wednesday. Continue on Thursday. Then we have a wrap on Friday if we don't finish on Thursday. So until tomorrow, we are done for today. I am still Abamba Sarah. You have a beautiful night ahead. Bye.